Our next guest says that today, historically, is the best day of the year for the S&P. Joining us to explain is Ryan Detrick. He's the chief market strategist of Carson Group. And Ryan, we thought October was the month for crashes only. What is this about today being the best day for the S&P 500? Does that have anything to do with bouncing back from crashes?
It sure does. Good morning. Thanks for having me back, guys. You think about October, it's spooky, right? It's supposed to scare you. Historically, you tend to get that in October. And look at that just this year. Everybody's worried start of the month about the government shutdown. Then, of course, is President Trump going to meet with President Xi and a 3% drop a couple Fridays ago? Then we saw nearly a VIX spike of 30 just a week and a half ago on all the fears over regional banks and all that stuff. And then you have those lows. And for whatever reason, it is October 28th. You get the low on the 27th, then the bounce. It's also my birthday, by the way, which I don't know if that's causation or not. But
today is
it
your
is
birthday?
the best. Yeah, today, the best day of the year on average. So go figure, but it is.
Happy
Get up early on my
birthday.
birthday, but no, thank you. But I think we had the lows a little bit ago, like last week, right, when that VIX imploded. But Becky, this year played out again, where October scares everyone, and then you're going to have a year-end rally. We're still optimistic that year-end rally started, and we're overweight equity still.
There was another statistic you used in the notes. When the S&P is up 15% year to date or more as we head into November, the final 2 months have been higher all but once the past 21 times that's happened?
That's exactly right. That's a big question everyone has. Well, we're up a lot going into these last 2 months. When you're up 15% for the year, like you said, going into the last 2 months, like we're probably going to be this time, those last 2 months have been higher 20 out of 21 times. Okay, so that's incredible. Now, laying on that, everybody remember selling may go away. We're up 6 months in a row. That didn't really work this time. Only 3 other times in history have we been up 6 months in a row going into November, which, by the way, everyone's going to hear this. November is a really strong month historically. November's been higher every time. And the average return in November and December after a 6-month win streak is 6%. Now, I'm not saying we're going to be up 6% the next 2 months, but a 20% year, which actually is not that far away, is very, very likely for the third one in a row for the S&P here.
So you didn't manufacture all these numbers about your birthday just because you want everybody to be happy on your birthday?
I joke. Well, you can double check it, but I'm pretty sure it's right. I'm pretty sure. Yeah, today is up 0.5% on average. December 26 is up 0.49% on average. So we'll see. So I know we had a big rally yesterday. We're up a lot the last 3 days, but yeah, happy birthday and let's keep it going.
Okay, I like the historical statistics. Let's talk about what's happening this time because we always say this time's different, right? What do you make of all of the potential headwinds that we've seen, but then a lot of the tailwinds, too? There's so much happening in this market. There's concerns about what happens with tariffs, concerns that have been taken down, I guess, for the moment with concerns about the China-U.S. relations. You have a lot of things happening in the background that are tailwinds for the markets, too, not the least of which the tax bill being extended.
No, there's a lot swirling out there. I think what's fascinating to us, we're hitting all-time highs, 35 all-time highs in the S&P 500 as of yesterday. Yet, if you look out there's things like the CNN Fear and Greed Index is still in fear. You've got the AAII have more bears than bulls. And I know there's pockets of optimism, but Becky, we're not seeing at all over-the-top excitement, right? 22% of active managers have underperformed their benchmark this year. I mean, those are things, again, that say maybe this rally can continue. And one more thing on this, it's not just a U.S. story. I know I've gone on with you all year saying this. When in doubt, diversify it out. We're overweight equities. We have a large amount of that actually developed international, right? We think around the globe there's a lot of opportunities. U.S., we still like it, don't get me wrong, but this is a nice scenario where we don't think it's one more thing. We don't think it's like 2017 where for 1 year Europe did well, rest of the year did well. We think this could be a couple years of other parts of the world doing well. So stay diversified, but overweight equities is what we've been preaching, and we're still there.
Yeah, a lot of other parts of the world have actually done better than we have this year.
Actually, that's a great point. U.S. is up 17% for the year. That's actually one of the worst performers. Now, listen, the last 3 years, we understand we've done well. But that's a great point, and that's why I think this year made a lot of sense to be more diversified than in the past.
Ryan, what are you on the lookout for? What would concern you? What would make you think, we got to rethink some of this bullishness?
Yeah, I like to look at, you talked about already, transports were lagging, yes, but overall we've had a lot of participation. Various advanced decline lines are hitting all-time highs. Breadth tends to lead price. So if that starts to weaken, the credit spreads, credit markets are functioning just fine. If that starts to expand. Now, one thing also for the listeners to know, the Fed, right, the old saying, don't fight the Fed. The Fed's going to cut interest rates in all likelihood tomorrow. When they've cut interest rates, Becky, within 2% of an all-time high, like we're probably going to do again tomorrow, the S&P 500 has been higher 21 out of 21 times a year later. Those are just the numbers. There's a lot of other stuff to consider, but I think when you layer that on with a lot of other stuff, and we didn't even talk about earnings. Earnings have been spectacular so far. That recession we've been promised is pushed back again. There's just still reasons to think that if we have any scary days like we did a couple Fridays ago and a Friday before that, don't panic. A lot of people did use an opportunity to stay invested or even buy some things as this bull market continues to go higher.